Contract and procurement fraud involves deceptive practices that manipulate the acquisition of goods, services, construction projects, or contractual relationships for personal or organizational gain. Because procurement activities often involve significant financial expenditures, multiple stakeholders, and complex decision-making processes, they present numerous opportunities for fraud. These schemes can be committed by employees, vendors, contractors, consultants, or external parties acting independently or in collusion. Procurement fraud increases organizational costs, reduces competition, undermines public trust, and frequently results in inferior goods or services. Fraud examiners must understand contract formation, procurement procedures, vendor relationships, and internal controls to effectively identify, investigate, and prevent fraudulent activities throughout the procurement lifecycle. A fundamental understanding of contract law is essential when examining procurement fraud. A contract is a legally enforceable agreement that establishes rights and obligations between parties. Valid contracts generally require an offer, acceptance, consideration, legal capacity, and a lawful purpose. Procurement contracts define expectations regarding pricing, performance standards, delivery requirements, timelines, and remedies for non-performance. Fraud can arise when parties intentionally misrepresent facts, conceal material information, falsify documentation, or violate contractual obligations. Fraud examiners frequently review contract terms, amendments, correspondence, and supporting records to determine whether improper conduct occurred. Understanding contractual relationships helps investigators identify deviations from legitimate business practices and assess potential financial harm. Organizations employ various procurement methods depending on operational requirements, regulatory obligations, and market conditions. Common procurement approaches include competitive bidding, requests for proposals, requests for quotations, negotiated procurements, and sole source contracting. Competitive procurement methods generally promote transparency, fairness, and cost efficiency by allowing multiple vendors to compete for contracts. Sole source procurement may be justified when only one supplier can provide a required product or service, but such arrangements often carry elevated fraud risks. Fraudsters may manipulate procurement methods by restricting competition, steering contracts toward favored vendors, or circumventing established procedures. Strong oversight helps ensure procurement decisions remain objective and properly documented. The procurement process typically consists of several interconnected phases, each presenting distinct fraud risks. The process begins with identifying organizational needs and developing procurement specifications. Subsequent stages include vendor solicitation, bid evaluation, contract award, contract administration, receipt of goods or services, invoice processing, and payment authorization. Fraud may occur during any phase through manipulation of specifications, favoritism in vendor selection, falsification of evaluations, unauthorized contract modifications, or improper approval of invoices. Because procurement activities often involve numerous participants and transactions, effective controls must address risks throughout the entire process. Fraud examiners analyze procurement documentation, approval records, and transaction histories to identify irregularities. Procurement fraud schemes generally fall into several broad categories involving corruption, billing fraud, conflicts of interest, and contract performance abuses. Corruption schemes include bribery, kickbacks, and illegal gratuities intended to influence procurement decisions. Conflicts of interest occur when employees place personal interests above organizational interests by directing contracts to related parties or businesses in which they have undisclosed financial interests. Billing schemes involve overcharging, duplicate billing, fictitious invoices, or payments for goods and services never delivered. Performance-related fraud includes substitution of inferior products, non-conforming goods, defective pricing, and failure to meet contractual obligations. These schemes often involve collusion between internal personnel and external vendors. Bid rigging schemes represent a particularly significant category of procurement fraud because they undermine the competitive process designed to protect organizational resources. Common forms include bid rotation, bid suppression, complementary bidding, market allocation, and collusive pricing arrangements. Vendors may coordinate responses to ensure predetermined outcomes while maintaining the appearance of competition. Internal participants may assist by sharing confidential information, tailoring specifications to favor specific bidders, or manipulating evaluation criteria. Bid rigging frequently results in inflated prices, reduced quality, and diminished innovation. Fraud examiners often evaluate bidding patterns, vendor relationships, pricing anomalies, and communication records to identify evidence of collusive activity and procurement manipulation. Effective prevention of contract and procurement fraud requires a robust system of governance, internal controls, and oversight mechanisms. Organizations should establish clear procurement policies, segregation of duties, competitive bidding requirements, approval hierarchies, and vendor due diligence procedures. Employee training programs help promote awareness of fraud risks, ethical obligations, and reporting responsibilities. Independent reviews of procurement decisions, contract awards, and vendor performance provide additional assurance that procedures are followed appropriately. Data analytics can identify unusual purchasing patterns, duplicate payments, suspicious vendor relationships, and pricing irregularities. A strong ethical culture, supported by management commitment, significantly reduces opportunities for procurement-related misconduct. An effective anti-fraud procurement program integrates prevention, detection, investigation, and continuous monitoring into a comprehensive risk management framework. Organizations should conduct periodic procurement fraud risk assessments, evaluate vendor management processes, and review contract administration activities for potential weaknesses.